Hello and welcome to this preview video at xm.com. We'll be discussing the upcoming U.S. data, including PCE inflation figures and the August non-farm payrolls report, and the potential reaction in the dollar. I'm Maria Pachardez, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, given that this past Friday, Fed Chair Powell struck a balanced tone at the Jackson Hole Symposium, do you think the upcoming data will attract even more attention? What are we likely to get from the latest PCE inflation figures due out on Thursday and the August NFP report on Friday? Do you think another 25 basis point rate hike is likely in September or November?
Well, Maria, there's certainly a lot of focus on whether or not we're going to get one more rate hike from the Fed, and we keep seeing the expectations around that. They keep swinging around. We just had some weakish data in terms of the JOLTS, job openings, and consumer confidence. So now the expectations about further rate hike have been pared significantly back. The markets actually seem to have a tendency to want to hope that the Fed is done hiking, but we shall have to wait and see what's going to happen to the PCE inflation data and the jobs report, and it's quite possible we may get a mixed batch of data because with the core PCE price index, now of course this is the measure of inflation that the Fed puts the most emphasis on. We may see the core PCE price index edge up for the months of July to 4.2% from 4.1%, and that would actually be in line with CPI inflation, which also edged up in July. And then on Friday, the jobs report. Now this could be interesting actually because now we are seeing, of course, a bit of a slowdown, a bit of a cooling off in the jobs market, and forecasts are that the payrolls will have risen by about 170,000. So that would be a bit of a slowdown compared to July. The wage growth in August is expected at 4.4%. That would be unchanged from the prior month, and the jobless rate to stay steady at 3.5%. So although we are seeing a bit of a slowdown in jobs growth, overall the labor market remains pretty tight. What we may see though for the month of August is the impact from the recent strikes across America, so that may actually pull the headline figure lower. But then this isn't all good news in terms of the Fed getting its much sought cooling off in the labor market, because in fact to settle these labor disputes, a lot of firms have in fact been offering big pay increases. So we may well see in the coming months further uptick in wage growth, and that of course would not be good news in terms of the Fed's fight against inflation. So a lot is at stake in terms of which way market expectations go in terms of a rate hike this year. Although even if we were to get a rate hike, I think I think we would have to get a pretty strong set of numbers to get a September rate hike, because markets are more looking now towards November in terms of possibly that one final hike from the Fed.
Turning to the U.S. dollar now, what's the short and medium-term outlook?
Well, the US dollar has made a pretty impressive rebound, although the fact that it's failed to exceed its previous peak, I think that kind of suggests that this rebound was probably not sustainable, because following that this past week's sluggish data, the dollar has started to fall back now again, and that's because again once again markets have this strong conviction that we won't see another rate hike from the Fed, and then next year the Fed will begin cutting rates. But of course, we've been here before, where markets are convinced that we're at the end of the tightening cycle, and then we start getting further strong numbers from the US economy. If we have a look at at the forecast for third quarter GDP, they're running around 6% annualized rate. So that's a pretty pretty robust growth rate for this late stage of the tightening cycle. And we also have On the other hand, the struggle in the manufacturing sector, we're also going to get the ISM manufacturing PMI on Friday, so those will be significant as well. So it's a very mixed picture, but I think for the dollar, it's all going to come down to whether or not, even if there is some resiliency in the economy, is that enough to warrant another rate hike? And I think markets are more inclined to react to negative data rather than strong data because of the fact that we already had a pretty decent rebound in the dollar. So I think if you get some more solid data, I think there's only so much the dollar can go higher, whereas on the downside, any negative surprises will probably fuel further sell-off in the US dollar.
Ravi, thanks so much. And thanks for joining us for this preview video at xm.com.